China has grounded Boeing, slamming the door on one of America's most iconic companies. Deliveries of new jets stopped, purchases of American-made parts frozen. What's behind this dramatic move? Well, it's the latest chapter in the escalating trade war between the US and China that's been rattling the global market for years. And now, Boeing, already struggling with production issues and competition, is caught in the crossfire. Buckle up, because things are about to get turbulent. China's decision to halt all Boeing jet deliveries is not just another retaliatory tariff. It's a calculated strike that could shift the entire dynamics of global aviation. With more than 2,000 Boeing planes already flying in China, the world's largest aviation market outside the US, this is not just a small disruption, it's a game-changing escalation. But this latest move, targeting Boeing specifically, it's personal. We are not talking about smartphones or semiconductor anymore. The trade war has hit the skies and Boeing is paying the price. The company is already reeling from production delays, regulation scrutiny, and 7-week strike that crippled their assembly lines. In fact, their 2024 deliveries plummeted to 348 jets, the lowest since the pandemic. But here is where it gets even worse. Boeing's biggest international customer is China, and it's been counting on this market to double its commercial fleet by 2043. That's 8,800 new jets. That means 8,800 new opportunities for billions of dollars in sales, fueling the company's growth for decades. But with China's move to freeze deliveries, Boeing could be facing a crisis that goes far beyond lost contracts. It's a battle for global market dominance. Already, Airbus, Boeing's European rival, is heading the race. In 2024, Airbus delivered 766 jets, booked 826 net orders, while Boeing lagged behind with only 377 net orders. And this is not the first year where Boeing has been outpaced by Airbus. It's the 6th consecutive year of falling behind. Now, China's freeze on Boeing deliveries could push the company even further behind, and there is no telling how long it could take for Boeing to recover. Boeing is a major player in China's aviation growth. According to Boeing's 2024 commercial market outlook, China's demand for new planes will surge over the next 2 decades, growing at 5.2% annually, driven by booming economy and expanding passenger networks. China will need 8,830 new planes over the next 20 years, 60% for expansion and 40% to replace the older jets. That's the big business for any aircraft manufacturer. By 2043, China's commercial fleet is expected to double. But with this Boeing freeze, China is positioning itself to either shift its allegiance or go all in on domestic aviation growth. Boeing's long-term forecasts have already been disrupted by this trade war, and now they face the real possibilities of losing their foothold in the world's largest aviation market. For over 50 years, Boeing has been a cornerstone of China's civil aviation. The company has delivered more than 2,000 planes to Chinese airlines, making China its largest market outside the US. The relationship has been so strong that Boeing's activities in China contribute over $1.5 billion annually to the country's economy. But now, China's trade war tactics have Boeing in a crucial and critical position. Will Boeing overcome this major setback, or will it lose its grip on a market that's essential to its survival in the years to come? The battle between the US and China has officially spread to the skies, and now no one knows who will come out on the top.